Gold has stored wealth for thousands of years. Bitcoin is only 17 years old. Which one is better for protecting your money? Today we compare gold and Bitcoin side by side so you can decide what fits your future. We'll look at scarcity, durability, portability, and how each one holds value over time. Both are called stores of value, but it is important to note that they work in very different ways, with the risk involved in each. By the end of this video, you'll understand exactly how each one works and why people choose one over the other. Gold or Bitcoin? Let's start with the basics. What is gold? Gold is a metal, dug straight out of the earth. Miners have pulled it from rock and rivers for over 5,000 years. Chemically, gold barely reacts. It doesn't rust, tarnish, or decay. That's one reason gold survives so long. Because of its physical state, gold needs a vault, a safe, or a box to keep it secure. You can hold gold in your hand. You can see it, weigh it, and feel it, and proof it's real. But moving large amounts of gold across the world takes trucks, guards, and time, which can be expensive, time-consuming, or even unsafe. For most of history, gold has been the default answer to the question, what holds value? What is Bitcoin? Bitcoin isn't physical at all. It's a digital currency, built entirely out of computer code. It runs on a network of computers around the world, all checking each other's work, and it keeps the whole system honest. Every transaction is written into a public ledger called the blockchain. Anyone can look it up. No single person or company controls it. It's secured by math, not by a bank or government. You can send Bitcoin anywhere in the world, to anyone, in minutes, using just a phone. Instead of a vault, Bitcoin is stored using a digital key. A password only you should know. You reveal your digital key, and your Bitcoin is at risk of getting sold or lost. Scarcity. Gold is scarce because there's only so much of it left in the ground to dig up. Experts estimate most of the world's easy-to-reach gold has already been mined. What remains is often buried deeper, or spread thinly across low-quality ore. New gold is still discovered every year, just slowly, and often at a higher cost to extract the gold, which reduces its availability. Because supply grows slowly, gold has historically kept its value, even as paper money loses purchasing power. But scarce doesn't mean fixed. Total gold above ground still grows a little every single year. So gold's scarcity depends on geology and on how much we're willing to spend digging for more. Bitcoin is different. Its total supply is hard-coded. Only 21 million coins will ever exist. No miner, company, or government can create more than that. That number isn't a guess. It's written into the software and enforced by every computer on the network. New Bitcoins are released slowly through a process called mining, using computer power instead of shovels. Roughly every 4 years, the reward for mining is cut in half, so new supply keeps shrinking. By around the year 2140, almost all 21 million coins will have been created. So while gold's supply can still grow, Bitcoin's supply is designed to have a hard, known limit. Durability and security. Gold does not rust, burn, or decay. A gold coin from centuries ago still looks like gold today. But physical gold can be stolen, lost, or confiscated if someone finds where it's kept. Bitcoin has no physical form to steal, but its security depends on protecting a digital key, that is, group of words or elements that unlocks a particular wallet. If you lose that key, or someone else gets it, the Bitcoin can be gone forever. There's no bank or customer service line to call for a reset. The Bitcoin network itself is extremely hard to shut down because it runs on thousands of computers at once. Gold is protected by physical security. Bitcoin is protected by cryptography and a spread-out network, which might not be convenient. Portability and divisibility. Moving gold across a border means carrying real weight and often declaring it to customs. Bitcoin can move across the entire planet in minutes, with just an internet connection. Gold can be divided, but cutting it into tiny pieces is messy and impractical for small payments. Bitcoin can be divided into 100 million tiny units, making it easy to send even a few cents worth. This makes Bitcoin more practical for everyday digital payments, at least in theory. Gold, meanwhile, still shines in a different role. Gold can be used to make jewelries and as a physical store of wealth. History and trust. Gold has been used as money by nearly every civilization in recorded history. From ancient Egypt to modern economies, it has never truly gone out of style. Central banks around the world still hold huge reserves of gold today as a backup asset. Bitcoin's track record is much shorter, just over 15 years since it was created. It launched in 2009 in the aftermath of a major financial crisis. In that short time, it has survived multiple crashes, bans, and predictions of its death. Each time, the network kept running, and the price eventually recovered. It has also gained millions of users, and slowly, acceptance from some major companies and countries. Gold has thousands of years of trust behind it. Bitcoin is still building its own track record. Volatility. Gold's price does move, but usually slowly, in smaller, gentler swings over time. Bitcoin's price can swing wildly, rising or falling double digits in a single day. This kind of movement is common, not exceptional, in Bitcoin's short history. That volatility can mean bigger potential gains, but also bigger potential losses, which makes it risky to invest in. It's part of why Bitcoin is often described as a higher risk asset. News, regulation, and even a single public comment have historically moved Bitcoin's price sharply. Investors often describe gold as the calm asset and Bitcoin as the high-energy one. Each personality suits a different type of investor and risk tolerance. Neither is right or wrong. They simply carry very different levels of risk. Understanding your own comfort with risk is key to choosing between them. Use cases today. Gold today is used in jewelry, electronics, and as a reserve asset held by governments. Bitcoin is used for online payments, cross-border transfers, and as a speculative investment. Many people also simply hold it long-term, hoping its value rises. Some businesses now accept Bitcoin directly, especially for international customers, as a medium of payment. A small number of countries have even explored Bitcoin as legal tender. These experiments have had mixed results so far. Meanwhile, both gold and Bitcoin now trade through funds, making them easier to buy without holding either gold or Bitcoin directly. In short, gold plays a traditional role, while Bitcoin plays a newer, more digital one. Both continue to evolve as the financial world changes around them. Risks. Gold's risks include theft, storage costs, and the chance a government could restrict its ownership. Storing large amounts safely can also become expensive over time. Bitcoin's risks include hacking, lost passwords, and regulation that's still evolving worldwide. Laws around Bitcoin differ significantly from country to country. Bitcoin also depends on electricity and internet access, something gold has never needed. Without power or connectivity, accessing your Bitcoin becomes impossible. Governments can and do regulate both assets, through taxes, reporting rules, or outright restrictions. Neither asset is risk-free. Understanding those risks matters more than picking a winner. A clear-eyed view of the downsides helps you make better decisions. Anyone considering either one should research thoroughly and understand what they're actually holding. Never invest based on hype alone. So, gold versus Bitcoin. Which one is better? It depends on what you value most. If you want a physical asset with thousands of years of proven history, gold fits that role. If you want a fixed, transparent supply and instant digital transfer, Bitcoin fits that role. Some people choose one. Others choose to hold a bit of both, for different reasons. Diversifying across different types of assets is a common strategy. This video is for education only. not financial advice. Always do your own research before investing. Thanks for watching. Now you understand the real differences between gold and Bitcoin. We'll see you in the next video. Don't forget to subscribe to enjoy more videos like this.